Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Brian Curtis along with Doug Krisner. Join us each day for the stories making news and moving markets in the Asia Pacific. You can subscribe to the show anywhere you get your podcasts and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Nvidia was already the world's most valuable semiconductor firm. Well, now the company has become the first ever chip maker to hit the $3 trillion market cap level. We had a rally in Nvidia today of 5%, a record high, overtaking Apple in the process in terms of market cap. Despite fears of an AI bubble, Bloomberg's Caroline Hyde tells us Nvidia's gains are justified.
The valuation, in many ways, is phenomenal from a $3 trillion perspective. But the PE ratios, they ain't that crazy. Because why? Revenue is growing at such a pace. Just take their previous quarter numbers. When you've got revenue climbing at 200%, no wonder the share price is already climbing 200%. We're meant to be anticipating these sorts of gains. It's meant to be a future indication of value.
She is Caroline Hyde, the co-host of Bloomberg Technology. Nvidia shares, by the way, are up 147% so far this year, with the entire chip sector showing no sign of slowing down. Brian?
Well, let's bring in Caroline's co-host, Ed Ludlow. These two, boy, they really know this company and they know the technology sphere. Ed, thanks very much for joining us. Well, that said, even what Caroline mentioned there, the forward PE now is over 42. Now, you could buy Nvidia at $950 the day of its earnings. What was that, 10 days ago? It's now at $1,224. The average target price on the street is $1,206. I'm curious what you're hearing from both investors and also end users.
Yeah, I think that when you think about Nvidia and its ability to make money from AI, that's kind of where most people's head is at. We know the story that all of the large language models that are being trained around the world, or AI models, are largely using H100 GPUs that go into big data centers. You know, if there is a big AI company out there, it's 99.9% certain that they're using Nvidia to do so. But here's the thing: we're excited. I heard it in your voice, guys, about a $3 trillion market cap. The other headline is that they surpassed Apple in market cap, right? And so I would ask you guys, do a side-by-side net margin comparison. Nvidia's net margin is about 55%. Apple's net margin is 25%. You know, that's the reality of what we're talking about. Nvidia is incredibly good at making a lot of money and making the world's best GPUs incredibly efficiently and incredibly profitably, and their relationship with TSMC is a big part of that.
Ed, our week began with comments from Jensen Huang speaking at a conference, right before a conference in Taiwan, and he was talking about the fact that NVIDIA is planning to upgrade these AI accelerators every year. How expensive a proposition is that?
Well, if you look at just sort of revenue, operating income, net income, R&D is a very small part of the cash flow equation each year for NVIDIA. I think I'm right in saying it's about $4 billion. There is a concern that NVIDIA is pumping out new generations of AI accelerators so quickly that what will happen is that they will have all these customers that have waited in line to get H100, the current volume generation, who then turn around and say, hey guys, hold on. I just spent billions of dollars on H100s, and now you already have a new version that makes it obsolete. The retort or pushback that NVIDIA has is that this is the early innings or a nascent industry, right? And the addressable market is very large. But yeah, they're proving that. They're ramping H200, their next gen AI accelerator. Blackwell ships by the end of this year, and Rubin starts shipping next year. And based on their performance and past precedent, we take them at face value and believe them that they'll have a new AI accelerator at that cadence every 12 months.
Yeah, so something has happened this week. Doug mentioned Computex, and you've just laid it out. We got some new information there for sure. But if you look at just in the last day, ASML up 9.5%, TSMC up another 6.9%, AMD, like the little brother, second cousin, whatever of Nvidia, up 3.9% in this last day, and Nvidia up more than 5%. So I guess I want to just put it to you again. Why this week? What happened this week?
I think it's the idea that these names can bring products to market. I'm not saying how quickly, but that they actually have sales channels to do it. What you see in Computex is not just all of the chip makers. So AMD, Nvidia both make AI accelerators, but you see all the OEMs or like hardware makers there, people that make servers, HPE you talked about earlier in your segment, Dell. And what those enterprise companies are so good at is actually convincing everyday businesses around the world that the latest Nvidia tech is something they actually need. And the market's really starting to realize that. What they keep doing is going on stage together and saying, oh, you guys want to do AI? This is what it looks like when we sell you a server that's capable of doing that. And the reason that the stocks are going the way they are, when we come around to earnings, it materializes as top line growth, which is what Caroline was saying. And investors love that. They love to see the proof in the pudding.
Well, I'm glad you mentioned HPE, Hewlett-Packard Enterprise. The stock today rallied. The company was able to report a big increase in revenue. A lot of this is driven by, obviously, the servers built for AI. Was this a big surprise for the folks in Silicon Valley that HPE kind of came out of nowhere, it would appear, and delivered these type of results?
Actually, no, it's not a big surprise if you understand how AI works in the real world. And I'm really glad you guys are talking about this on the program. If you're training a large language model, you don't just phone Jensen Huang and say, can I have 10,000 GPUs, please? He doesn't pop them in a bag and mail them to you. The GPUs get combined with memory chips and CPUs, and they ship in server racks. Just imagine rows and rows of servers. Who builds those servers, guys? HPE does, and they've done it for a really long time, and they're really exceptionally good at it. So, it's not a surprise. And I did that interview that you guys played out a moment ago this morning, and that's what I asked him. Like, are you finally getting credit for something you've been doing for a long time?
Well, I want to go back to Nvidia since that's kind of at the heart of this. Is there some key man risk there with Jensen Huang?
He is the rock star of the moment, right? Like, it was Elon Musk and now it's Jensen, and he is a very engineering driven CEO. He is in high demand, but I can tell you that the bench of talent at Nvidia is absolutely insane. Their comp bill is something worth looking at going forward, their stock-based compensation, because they are having to pay over the nose to keep a lot of very smart people at that company.
I think he's worth more than $90 billion of himself. Should this company in any way be looking over its shoulder when you consider an Intel or an AMD? Or are we so far down the road now that Nvidia is essentially carefree?
They're the only maker of AI accelerators so far producing at volume. TSMC makes them as the contract manufacturer. But simply, these are the numbers. Nvidia will do $100 billion of AI accelerator sales this year. AMD might do $4 billion, which is pretty good based on what they guided recently. And Intel, $500 million. Intel and AMD are negligible players at this point.
There might even be another leg up from Broadcom's earnings coming on June 12th, because that's been kind of sleepy there, and that's also a company that's benefited a lot. Ed, thank you, as usual, for sharing your insights and educating us on this. That is Ed Ludlow from Bloomberg Technology and the co-host of Key Program there with Caroline Hyde. Joining us now is Anastasia Amoroso, Chief Investment Strategist at iCapital. Anastasia, just give you this wide open platform. What do you like at the moment?
Well, there's a lot to like, I would say, across the spectrum. And, I like, for example, the semiconductor trade that is just unstoppable. I think that is ongoing. But at the same time, the broader manufacturing momentum around the world is really picking up right now. And this is a story that we started talking about earlier this year, but it's not just a 1 month trade. This is really a 9-month average upswing in manufacturing. So I really like that. And then, of course, to kind of circle the world and go over to Europe, the ECB is poised to begin its rate cutting campaign. And I'm actually quite bullish on European equities, not necessarily because of that, but because of the economic momentum that I see there in services and manufacturing. So lots to pick up on.
What about geopolitics? How is that entering your thinking? We've had the elections in Mexico and in India. Brian and I were talking about K-shaped recoveries yesterday in both of those jurisdictions. How are you factoring in geopolitics right now in your thinking?
Right. Well, geopolitics is a constant in the markets, if you will. There's always an election cycle somewhere. There's unfortunately always a disturbance somewhere. But what we do know historically is that volatility surrounding some of these geopolitical events tends to come and go, and it really smooths out, with the passage of time. And so obviously in the United States, there's a big election coming up in November, but maybe it's, and by the way, we see the volatility surface imply some concern around the event, but at the same time, we've seen this before. We've been through the two candidates before, and so I think there's a certain expectations of what the policy may look like. But the markets right now, I think, are really focused on the fundamental economic momentum, and it's hard to, even for geopolitics, to disrupt that.
You mentioned that manufacturing was on the upswing, and I think that's a positive. I think another positive is that earnings revisions, earnings estimates are higher than both GDP growth and inflation levels and the Fed funds rate. Is that something that would cause you to look at the U.S. market and to think about broadening the exposure well beyond tech?
Yes, that's a really, really good point. Time and time again over the last few quarters, we have seen GDP growth outperform the consensus expectations that continue to expect essentially 0% growth. And so we've seen, for example, in the United States, a very significant earnings beat for the first quarter. And it's not just in tech, it's across the board. And also, Brian, yes, it's about Nvidia this quarter and then has been for a while. But, as we progress through to the end of the year, we do see, for example, the big five, the top five U.S. names deliver about 17% earnings growth by the end of Q4. But that's also true for the rest of the 495 companies in the S&P that are also supposed to match that 17% earnings growth by Q4. So that's a really positive story of broadening out in the U.S. But also, again, to go back to Europe, I'm actually really encouraged by the degree of positive economic surprises there. Again, we've seen that on the services side. We've seen that on the business confidence side, which it's sort of interesting to say that about Europe, but business confidence is at the 26-month high in Europe, and GDP growth has been surpassing estimates. So as a result, Brian, earnings estimates have actually been the best. Earnings revisions have been the best in Europe across all the other developed markets.
But when you look at trade tension between the European Union and China, particularly in the EV space, does that cause you to get a little concerned, particularly when you look at a place like Germany that is so reliant on exporting some of those cars into the Chinese market?
Yeah, it's a concern to be mindful of for sure. And, there's a big global competition going on right now in terms of EVs and in terms of semiconductors. But I don't think that's really going away. And I think that's going to be the status quo that economies and companies will have to deal with. But I think they do adjust. And from the perspective of the broader markets, a pain in one sector is not necessarily representative of the whole. But clearly, doing the stock selection, you have to be mindful of that.
So I'm wondering whether or not we're getting into a potentially dangerous area of a melt-up in stocks because, you've had these earnings that have been very strong, little delayed reaction, but now boom to the upside. You've had the economic data getting back to Goldilocks, and it could be a time that a lot of money floods in. Do you worry about that? And if so, do you sell into it?
So short term, sometimes you worry about that, and for example, we've seen plenty of times just in the last few weeks where you see these rallies, you get to near term, technically overbought levels. By the way, if you look at Nvidia, it's near term, technically quite overbought. And then you see these pullbacks, but these pullbacks don't end up being all that meaningful because, Brian, I think there's two things happening. First of all, you have, the twofold catalyst for equities, which is still resilient economic activity and the easing bias from central banks. So that's really supporting the stocks fundamentally. And on the other side, you have $8 trillion or more of money markets globally. And I think investors are really starting to come around to the central banks eventually, sooner or later, cutting those interest rates. And in the meantime, stocks are rallying quite a bit. So I do think that some of that money is going to find its way into the equity market. So sometimes you get concerned about near-term technical levels, but longer term.
Before we let you go, Anastasia, let's get your view on China. You're right there. I mean, I'm sure you're going to be doing your homework on a number of different opportunities in China. Is there anything that you think is compelling right now?
Well, I do. And it's interesting because, if you haven't been paying attention to the China market, and if you're sitting in the U.S., it's easy to say, well, investors sort of given up on China. But being here, first of all, that's certainly not the case. And it should never be the case. So I think if I look at the hedge fund community, for example, they've added to the long China trade. They've since pulled back. But what I do think is that the global uptick in activity in manufacturing is certainly going to benefit China. I think a lot of the megatrends that we talk about of artificial intelligence and semiconductors and electric vehicles are playing out right here in China. And I do think that China has room to cut rates to further support the economy. That's a positive.
It's nice to have you with us here in our studios. Come back again soon. Anastasia Amoroso, Chief Investment Strategist at iCapital. You'll remember her from a long time ago, Merrill Lynch, and also JP Morgan. We look at markets for you all throughout the day here on Bloomberg Radio. Ryan Curtis in the Bloomberg Interactive Brokers studio in Hong Kong. Well, Asian equities are rallying this morning. Earlier, we had big U.S. tech companies driving stocks to all-time highs. The Nasdaq 100 up a little more than 2%. The S&P 500 gaining 1.2%. The Dow Jones Industrial Average up just 0.25%. Part of the rally came down to what was comfortable economic data. We say that because the ADP jobs report was solid, but it was a little softer than expected. And the service sector PMI expanded by the most in 9 months, yet its employment component was a tad softer than consensus at 47.1. The takeaway was that growth is okay and disinflation seems to be okay as well. Some of these numbers are pretty stark. Nvidia, we'll tell you more about that in a moment, up 5.2%. The SOX was up 4.5%. Companies like Meta gaining 3.8%. So more now on Nvidia. That rally put it past the $3 trillion level in market cap and also above Apple in size. Apple also rallied. ASML said it would ship its latest chip-making equipment at TSMC this year. It says TSMC and Intel will get the high-grade extreme ultraviolet machines by the end of the year. In fact, Intel already has received one. TSMC coming up. TSMC has raised some concerns about the price. A senior executive said, I like the capabilities, but I don't like the sticker price. But the stock did rally. TSMC up 6.9%, Intel up 2.5%, and ASML's ADRs up almost 10%. Yields down. The yield on the 10-year, 4.28%. The dollar down as well. And that is a check of markets. Ed Baxter now with news in San Francisco. Ed?
All right. Thank you, Brian. A Georgia Court of Appeals has halted the Georgia interference case against Donald Trump and others. This while it reviews a lower court judge's ruling allowing DA Fani Willis to remain on the case. But Jack Smith now is pushing to start the January 6th trial. Bloomberg's Nia Malika Henderson says the Trump camp is concerned.
I think they are very worried. I mean, you hear Republicans trying to sort of spin what came out of New York to say, oh, this was a fundraising boon. We'll see it at some point. Maybe it was, maybe it wasn't.
January 6th is waiting on a decision on Trump immunity. Senate Republicans have blocked a bill to codify the right to access contraception. New York Governor Kathy Hochul abruptly halting the Manhattan plan for congestion pricing. This announcement really took almost everybody by surprise.
My focus must be on putting more money back in people's pockets. And that's why I must stand up for them and say no to implementing the congestion pricing toll at this time.
Israel's President Isaac Herzog has issued a warning following another attack from Lebanon. He says the world better wake up and realize Israel has no choice but to protect its citizens. China's effort to recruit retired Western military pilots to train its Air Force continues unabated. The U.S. and 4 allies have put out a joint bulletin suggesting Beijing is undeterred despite repeated efforts to clamp down on that practice. Global news 24 hours a day and whenever you want it with Bloomberg News Now in San Francisco. I'm Ed Baxter. This is Bloomberg. All right, the long toss from San Francisco back to Hong Kong. Brian.
Yeah, over the shoulder catch. Thank you very much, Ed. Well, joining us now on the program to look at these hot and frothy markets is Mary Nicola, Bloomberg M-LIV Strategist. Mary, I know this must be a little bit painful to you. You know, you come from the background of managing other people's money, need to be cautious. I don't know about you, but I tell you, it's like the stars are getting aligned here. It almost feels like a melt-up is coming. Do you sell into it?
Yeah, it's an interesting point because everyone is waiting for the shoe to drop, right? And of course, you're looking at whether, of course, non-farm payroll is where it comes down to. And it comes down to, as you said earlier, that the data needs to be comfortable enough where you show that, you know, that it's inflation is cooling and the economy is holding up. And that's your ideal scenario. The bad scenario would be just if you see that prices are still rising and that you're seeing inflationary pressures, but everything else is slowing down. And that stagflationary mix is what stocks don't want to see. And that's why every data becomes even more important and sways the market in one direction.
Right now, I think the swaps market is continuing to price the first Fed rate cut in November, assuming that would be 25 basis points and maybe another in December. Do you think it's too much to say that we've seen the peak in the dollar?
No, I've long been dollar bullish, and largely because of the fact that even if the Fed cuts and let's say 1 or 2 basis points, you still have nominal yields quite attractive for the dollar, and that's going to keep up the dollar. So you still, if let's say the ECB cuts today, you still have a decent differential for the dollar, and that's what's going to keep it supported.
Goldman Sachs said a wall of money from passive equity allocations will pour into the stock market in early July. Do you buy that? Figuratively, not literally, of course.
There is a lot of money sitting on the sidelines. If you see where money market funds have been for a very long time, they've just been rising, and a lot of it has to do with the fact that, you know, for example, right now you can get a decent rate from short-term yields, and that has been keeping the money markets going. So it's a matter of especially if they see that rally continue, you could see that wall of money going through as the melt-up does happen and the melt-up continues.
Speaking of a rally, we had Nvidia shares jumping more than 5% today. The company now has a market cap above $3 trillion for the first time ever. What does the AI story mean for tech in Asia right now?
Yeah, it's been one of the key drivers, let's say, for Taiwan. So Taiwan has been one of the biggest beneficiaries and the best beneficiaries from the AI story, thanks to TSMC, and TSMC has been following through on a lot of what they've on that AI boom. Take, for example, Samsung isn't keeping up as much, so that's holding the Kospi back a bit. But for Taiwan, for example, that's going to keep going. But you're seeing globally, not only from governments are also filtering money into the AI boom, and that's going to continue. That's likely to continue, and that's going to set a lot of this growth disparity and productivity apart. So it looks like the AI-driven boom just looks set to continue.
Yet I was looking at Baidu's stock chart yesterday. It's pretty ugly, upper left to the bottom right. It seems like it can't get out of its own way. We know about all of the constraints that have been put on Chinese stocks, although we've had this bounce, obviously, of late. Let's talk for a moment about China. What has to happen for these stocks to really work?
Yeah, it's really going to come down to what happens on the implementation. So we've heard a lot of great policy announcements from the Chinese government, sort of putting a floor under the markets. But now it's going to be about implementation, because the retail market is still a very important part of the China markets, and they haven't really participated yet. They're still putting money into savings. They're actually putting their money into their mortgages. So that's where you're seeing a lot of the retail-driven money going towards. onwards. It's not going into the stock market just yet. But a lot of it is going to be predicated, if we see that shift coming through, until the implementation of a lot of what's announced, and if it actually puts a stop into the rout in the property market.
I think we can agree the big event for EM this week was in India with the election. How are you making sense of what the markets are reflecting right now and what they seem to be telling us?
Yeah, it's interesting to see how the outflows on January 4th. So it says it was one of the largest outflows that the Indian market has seen from foreign investors. A lot of that is indicative of how important growth policies are and the growth trajectory is. So for India, that's been one of the key things, especially because it's been an expensive market. If you look at it in valuation perspective, so let's say it's more expensive than Taiwan from a PE ratio, or even more expensive or very similar, not too far off the S&P 500. So and they have been delivering on growth, both earnings growth and nominal growth for GDP. So it's really about policy continuity if you're going to keep foreign investors interested in a market that does have expensive valuations.
Okay, you got 15 seconds. Give me a great call, something you see that others don't. You don't have to say why. We'll figure it out.
Well, I think it's all about ECB today, and what happens could have serious ramifications on the FX markets.
Yeah, I mean, we'll investigate it, really. But Mary, thank you so much for joining us. The excellent Mary Nicola with us from our Bloomberg M-LIV team, a strategist there. You can find her material on it.
This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.